So I just want to say welcome to a session that we've got as part of one of our Time to Grow programme days with Gurj Kang from Further Finance. He's going to introduce himself in more detail in a second, but he's someone that we've worked with for a number of years now and has got a kind of cross-sector view on startups and scaling different kinds of enterprises, and he's provided some one-to-one support with a number of people that we've worked with. So I'm going to say over to you from Kang Gurj, and do you want to make a start?
Absolutely, yeah, that'd be great. Thank you very much. First and foremost, thank you for everybody who's joined on today. I really appreciate, I guess, everybody taking the time out and sharing their lunch times with me, because it's always an honour. As Kayla said, I've been working alongside for a while. We've helped groups like yourselves and also individuals, and the key thing really is just trying to take the complexity out of finances. So if you're sat here, the key thing is that we want to try and build your confidence and your understanding, and so that you're not fearful of them, because the key thing that I kind of try to impress to people is that your finances and your financial reports, as we'll run through, are really your best friends. They're a key thing that you'll need to have to understand where you're at, where you're going. They signpost you to where, for example, there are gaps and also problems that you need to address. So we'll get kicking on. My background is effectively as a management accountant. I'm SEMA qualified. I've spent years looking at budgets and forecasts, far more years than I care to remember, if I'm perfectly honest. And these are a range of different companies that I've worked for, looking at either their budgets, forecasts, management accounts, or their management information and data. So that's just a range, and that also is in addition to some of the VSCE and smaller sector companies that I've looked at and helped advise and develop their budgets as well. So it's nothing to be fearful of at all. The objectives of today, we want to identify the key financial tools via five key steps, basically, within the finance cycle. And the key financial tools are important to us. What do they tell us and why they're important? I'll be running through those individually as I run through them. How do they tell you where an organization is and where it aims to go? They're the key signposts and signifiers that are really important to us, actually. And it's important to you as a people running and owning your organization, because that's the intimate detail that tells you where exactly you are, how far away you are from where you want to get to, but also to any external people for funding, or if you're looking at working with accountants or looking at working with any other organizations, they can be effectively an indicator of your success, or it can be an indicator of your position, and they are very fundamental for a lot of different types of applications. So it's quite important to have an understanding and knowledge base of it. But really, the biggest thing out of the key financial tool is that they are control. They are effectively like the key workers. They keep everything running and working in the background. So it's important to recognize how important they are, even though they might not have a forefront position within your organization, or you don't feel perhaps too comfortable with them. They're not anything that you should fear. The slide prior to this contains big organizations and big names, and that's exactly that. People like me and people far more qualified get paid a lot of money to put budgets together which fall apart and do not necessarily always meet requirements. So it's not something which is scientific. It's not something which is that you should ever put too much pressure on yourself or about. In terms of the 5 steps, we have the budget. For a healthy financial foundation, the budget is really about being honest. It's about being clear about your intentions, but it's being realistic and honest about your current position. That's the key thing. The second part is the cash flow, because you need to recognize the timing of cash, because in any business, the timing of cash, which is just literally as and when cash flows come in and cash flows go out, is survival. And you'll all be able to identify both of these 2 points from our own personal budgets and our own kind of personal ways that we manage our finances, whether it be our mortgages, bills, rents, rates, or whatever. We understand how we anticipate those costs coming in, how we manage those costs, and how we manage your surplus or deficit accordingly. It's exactly the same in a business. There's no further scientific proof that it's any more complicated at all. It really is that simple. There's just other things that you have to factor in. Point 3 is that we need to review and identify the areas to strengthen. So that's a continual sense of improvement and continual sense of review. Number 4 is a measurement of the performance of budget versus actual. So as you're trading, as you're moving along, you want to understand what the reality is against what you forecast. So let's say that you had sales, or let's say that you had a cost base that you forecast X amount, what was the reality? And then point 5, as you go on, and that completes a cycle, typically in a 12-month review, or possibly even shorter, is to tweak the budget accordingly and to keep maintaining your forecasts so that they are attainable and that they are achievable and realistic for you as well. And so that you're not putting too much pressure on yourself, but they're helping to put a sufficient stretch in to help you arrive and achieve your goals. So we're going to run through primarily the budget, the cash flow, and the income and expenditure, which is your budget versus actual report today. And points 3 and 5 are the points of review, which we'll pick up in between. So excellent. As we mentioned in the outline part, the session really aims to provide you with greater confidence in you being able to read and use these particular financial suites and reports to help you understand how they work for you. And also importantly, if you have trustees or a board, it's about being able to have the insight before you go to any of those meetings, or if you sit on a board and or are a trustee, basically the information that perhaps you should be looking out for and chasing. They provide insight, but they also provide feed-forward controls. And feed-forward control is a mechanism, which is what that cycle that we've just looked at the slide previously does. It identifies positives and says, keep on doing them. And it identifies negatives and says, stop doing them. You know, it is literally, it's that kind of cycle that wants to try to perpetuate positivity and growth, and also sees opportunities as you're going forward. As I said previously, think of them as essential key workers. The detail without them is not useful. So firstly, we come to budgets and why are they important? They're important for a range of reasons, but primarily we want to be able to understand cost behavior analysis. So for your particular setup that you may have, you want to be able to understand the costs that are related to providing that either that service or good, or providing that service to whichever sector you do. But you want to be able to understand how it behaves. So you want to understand, actually, can I predict its behavior? Income stream analysis, whether you have donations, funding, grants, or even sales of any goods. The whole idea is that you should be able to understand how the income that comes into your venture comes in as different streams, and again, how you can understand how they're expected to behave, because it gives you further control when you can understand how they're forecast. They're there for evaluation, and evaluation directly based upon your actual results, because we need to understand exactly what your actual results are, and then we need to see how far away you are from the budget, and that's the feed forward piece. Anything which is negatively too far away, you need to address. Anything which is positively also like performing against budget. So let's say you have greater donations or greater funding than expected, brilliant. That might be a one-off, but if you can continue that phase and cycle, please do. Motivation. We talked very briefly about stretching budgets, but the budget is meant to be a guide to where you aim to get to. Often, and sometimes when I do a lot of this work, it can be the case that people come forward and go, I've got a really brilliant idea, I really want to do this, and I want the impact to be measured as such. And you go, fantastic, let's put a financial budget together to look at the resources that you're going to require in order to fulfill that particular objective. So when you look at the resources and we measure it all through, sometimes you realize it's not possible to achieve it within the timescale that the person originally thought or sought out. There's nothing negative about that. All this does is identify the gaps that you have in funding, and the gaps that you may have in income, and the gaps that you may have in time. So it's fine. It gives you an idea about what you can commit to, and it gives you an idea about, actually, if I want to arrive at that particular point, how big is a gap? How big is that leap or jump for me to take? So some people get scared about undertaking that exercise simply because it can be a deterrent, or it can prove quite discouraging to their particular objective and to them setting up and moving on and moving forward. And it should never be that way. Actually, it's like me saying, right, in 2 years' time, I really genuinely want to go away on holiday and do something. And any type of budgeting that we do, and you go, right, how much does it cost? I've identified the gap and I know how much I need to save in order to achieve that objective. It's exactly the same. Sometimes it's quite discouraging because you're not achieving it in the time frame that you'd initially expected. But in terms of the passion and the belief that you have against it, that should never really stop. This is really a signpost to say, what else do I need to get there? That's the way that it's always, that I've always promoted a budget. It's your best friend. It's a mirror and it's the truth. It's a best friend, not the friend who's nice to you and says, yes, absolutely, you look great, you look fantastic. It's the friend who's completely honest about things. And I think sometimes that just allows everybody just to go back and address things and push things forward. Sometimes it actually means you end up having a bit of a longer look, or possibly extending the time period over which you wish to achieve that objective, which is absolutely fine. Okay, because everybody's in that boat. From the past 12 months, and with COVID and everything hitting, you're looking at not just organizations which may be small or SME, but I'm talking large scale and global institutions are all having to rethink and rework where they expect it to be. So they're all reworking budgets. They're all using budgets as a guide for evaluation and motivation. So everybody's in the same boat here. Information sharing, it becomes important because the budget is very much not just your plan of how you're aiming to get to that particular point or objective. It's actually a measure to other people of what your strategy is, of what your aims and objectives are. So it's a means of sharing your ambition and your drive. Expectation. We talk about cash flow, but the budget can be a very clear point of understanding when incomes and costs are expected. So you're able to sort of like anticipate and forecast when events are going to occur and what the impact of those events will be. Strategy delivery, definitely a main one. Your budget is an indicator for your strategy because it gives people an indication, an idea about where you're heading, how long it will take to get there, and what you aim to do with it, basically. So if you a view of your income and expenditure and budget and forecast, if anyone's gone for funding or if you're going to apply for funding with either fundraisers, grant awarders, and or business accounts and banks, they'll want to see that, and they use that as a numerical table of understanding your strategy, of being able to place how this strategy is going to unfold. And yes, it might be capital heavy, but actually, where is it going to lead to? What is it going to offer? Clarity. And clarity is another word for this I would use, granularity, which I'll come to later. But the whole point about clarity is it's about being as clear as you possibly can be in regards to all of your costs, all of your incomes, and everything that you'll have in between. And I will pick up a bit more on that when we talk about total cost recovery, but that's really important. And clarity can also be replaced with honesty. Be honest about things. People have fantastic ideas about what they want to achieve and do. And sometimes you cannot be too honest about the actual costs incurred or the actual timeframes incurred about being able to achieve it. Problem identification, again, it's exactly that I said at the top of the piece here. A budget can sometimes be discouraging, but sometimes it identifies areas where solutions are required, areas where there are gaps, areas where you need to either push funding, identify more money, identify more support, or more resource. So all of that is important because a budget will tell you that, absolutely. Different methods, just rolling over how the different types of methods that you can apply for budgets. Some of this may apply to you currently already. You may be using a mixture. There isn't a set formula at all. I don't think for this. I've seen companies and organizations amend the way that they budget over time and due to circumstance. And many organizations, in terms of the first example here, zero-based budgets, are reverting back to this method because what it does is it starts from scratch. So a lot of people, a lot of organizations have seen, much larger ones have seen restructures. If you're small and you don't have a great deal of resource or you don't have a great deal of income or expenditure happening, zero-based budgets will be your starting point because effectively you'll need to justify all of your income and your expenditure. It can be a very cleansing process as well to run a zero-based budget because what you do is you start effectively with zero assumptions. You don't carry any assumptions on. You go back and you review every single line with a means to be able to justify its existence. Rolling budgets are where you have an established a budget set up already, which some of you may have. And what that does is it takes the assumptions and details that you've already calculated and put together and amends it for any changes. So sometimes you might just say, actually, I know that I'll be working with a supplier next year. We'll be buying the same volume, but their costs may increase for inflation. So all I'm going to do is make a small amend to account for that inflation. Gathering the information for the production of your budget. The top-down budgets is just a title or name given to any budget where information is controlled by either, where I say management, but it could be yourselves as directors or sole traders or owners of your venture. And the idea is that's used to help and drive the strategy for the organization of the venture as it stands. Participative is when you have a bit more of a network. You may have volunteers working for you, you may have other people feeding in or inputting into the business. And what you do is you gather information from them because, yes, that's grassroots information and it's also quite vital. So there's never always just exclusively one or the other. There tends to be a bit of a mix. Often the participative side is basically going out to seek a second opinion, getting people, using people as a sounding board. The top-down element tends to be when one individual takes control and starts to map that out so that they ensure that it fits strategy. That's a key thing. And as the sentence at the bottom explains, for best practice, it is a combination of both top-down and participative, but dependent upon size. Now, there isn't a set way that anybody should really follow budgets or in terms of methods. The best method, as we'll see from the methodology we look at in the next few slides, will determine how you come across it. Zero-based budgets have been very popular amongst much larger organizations across the past 12 months because they have just realized that they have to go back to the drawing board and start from square one, really. So that can also be quite useful. And if you're unsure or you're not too sure about where you are with your budget, so you've got something which is part midway through, rather than continue any potential assumptions, going back to zero-based and literally starting from scratch can be very refreshing and offer far more clarity sometimes, because it just takes away any clouding of any vision that any previous assumptions have had. So it's also far more honest. The key things to think about when you work through your budget are to treat the creation like a science, which we'll look through, but then review it as an art. It is a science about determining whether something is an income or an expenditure, how things move and how things shift. However, the review of that will be, as we mentioned before, making moves and amends according to the assumptions that you have, according to the detail that you have. Granularity, the second point here, is key. What you want to try and do with your budget in terms of income and or cost is get back to the basic unit. Because then what the budget starts to do is it starts to serve as far more insight and data for you. Once you get back to the most individual basic unit, then the budget can then serve as building blocks for you to build up an idea of costing, build up an idea of how much income may come through, and build up income and costing via projects. So that's really, really important. As you build budgets, build and challenge and ensure that you record assumptions and workings throughout. Because there's no point having things proverbially on the back of a fag packet, or from a conversation that you had with somebody, or something that you wrote down, or something that you remembered on an afternoon. It has to really be recorded, because if anybody wishes to challenge that, then you're able to turn around and say it was on this basis. And that's the key thing. As much as it's a science as much as it's evidence-backed. You need to maintain as much evidence as you can for trying to explain why you believe your costs are going to be that high or where they come from. If you're starting a new venture and you've just perhaps started to hire premises and you have no previous experience of what your utilities costs will be, by all means, you can place an estimate from anything that you can garner. If you're 1 year in, you've already got 1 year's worth of expenditure. So use that as backup and evidence and say, right, in the past year, this is what occurred. So this is what I'm going to budget for next year. And obviously amend accordingly if you know that you're going to be spending more time there or less time there as such. But those assumptions are key, because otherwise it is just a series of numbers on a page. With the detail and the evidence, it tells a story. And that's the key thing. In terms of the methodology, when you're looking at it, and we talked about zero-based as well, what you need to do is gather as much information as you can. Literally, if you're running a particular process, or if you're running an event, you need to really understand all of the information that you have, and you need to be able to understand where it's coming from and how it relates to what you're aiming to deliver. Apply logic. Do you have costs in there that do not affect you, that do not affect what you're aiming to deliver, that don't impact on what you're doing? Then that's fine, you don't need them. But have you missed any costs, basically, that you need to have in there, which otherwise you will incur? The classic example that I always use is a company that basically has a base and then runs events externally, but they wouldn't necessarily work out the cost of the logistics of carrying things from their warehouse out to all these areas where they had the events. And often, especially when you're new, especially when you're formulating in the new and early stages, you have a lot of help from friends and family. And the key thing to remember is, yes, that's free, but going forward, it might not be there. It won't be free. So absolutely, I've had people go around and say, right, you haven't put down the cost of transporting your materials. And you go, no, of course not. That my mate turned up with a van. And you go, absolutely. But if your mate didn't turn up with a van, you would have had the cost of hiring one. You would have had the cost of all the insurance for it and everything else. So you really need to think about what the cost would be if you were running this also without that external help, because it gives you a genuine, true cost base if that help and support wasn't there. Because as we all know, friends and family are fantastic, but they're also not contracted to help. And often if they get a better offer than helping you lug equipment around, they'll take that on that any given day. So it's about making sure you capture everything that's there. And that's about being honest. You have to really be honest about the equipment that you need, the services that you need, and the costs that they will be at. We can't just actually say, well, you know, I've spoken to somebody, I've got one quote, and they're going to turn up, and I think it should be £25. If perhaps, or for example, a service of provision is going to be 4 times that amount, you know, generally. If you've seen 3 quotes and they range from £25 to 200, the best thing to do if you haven't committed to anything is ideally to take an average, but obviously not just to take the lowest amount, hoping that that's going to work out for you, because there could be further implications of them not meeting your service requirements, not being there on time, causing difficulties and problems, and not being somebody you want to work with in the future. So you have to think about all of those things. Start early with a budget as early as possible, because I know sometimes it's not always possible, but build across multiple phases. And building across multiple phases means that nobody, and I really genuinely know this from experience, and I've seen supposedly highly experienced people say this and do this, nobody has ever done a budget in one go. It's just not possible, because there are things that you will miss, things that you will overlook, there are things that you will completely not grasp or completely forget about, and it needs time. It doesn't need you to be completely meticulous, because that goes against the point. So there has to be a middle ground. And that middle ground is saying to yourself, pick an odd number, and I will always opt for 3, but pick an odd number and stick to it. And basically say, this is the number of times I'm going to produce, and I'm going to effectively review my budget. Do that, keep that in, and basically stick to it. You'll never get it done the first time round. Step away from it. Do your draft, make sure you've got your workings, try and do all your calculations, and then literally just step away from it for a couple of days if you can, or whatever time period you can. Then come back to it. If you can, show it to somebody else, work through your assumptions, talk through your calculations, get that sounding board there. Because sometimes what sounds like a fantastic idea when you sat on a table late at night, really early into the evening, really doesn't make actual sense to anybody when you actually start speaking to them. So that's really important. Check in to build as much expectation as you can. We've talked about this again, and this is going to form part of the reviews that we talked about the multiple phase review. That expectation, I've said PEST basically. PEST is an acronym which stands for political, economic, social, and technological. Now, it's difficult to grasp all of the things that will happen. Last year was a perfect example. But where possible, where you know that things will impact and affect the delivery of what you're doing, or perhaps you purchasing and buying in goods for what you're doing, there's always important to try and factor that in, whether that's increased costs, delays in timings, or anything else that you can muster. You need to be able to reflect that financially. Step away from it, as with the multiple phasings, and just see if it aligns with the company vision. You know that the company vision you set out when you started, and the broad ideas that you had when you started, basically were put together, and you had a real purpose and passion behind it. Does this budget help you achieve that? Are the activities which you've costed taking you to the place you want to get to? Are they reflecting you and your venture in the best way? Are they targeting and are they reaching out to the people that you wanted to reach out to? Those are the questions you have to ask yourself, because otherwise you're undertaking activity which isn't fitting your strategic model. So that's quite important. Revisit it and ensure that you're happy with it. So that's another key thing. It's really, really important to make sure that you are happy with that budget. By all means, please don't go tweaking into oblivion, because that really doesn't help anyone or anyone's sanity. But it is important to make sure that you are happy with that. And goes back to the penultimate point of, does it align with your company vision? Does it align with your objective, your brief, or your mission statement? So that's really key. And we talked about that and how to approach it. And when we're talking about obviously your activities and your details, I'm just going to touch upon the way that the activities sit and how they presentationally fall into a budget as well. So the first is obviously in terms of your activities, you'll classify them broadly into income or expenditure. They are one or the other. They can't be a combination of both. So once you've got all of your activities involved, once you've got all of your costs, and once you've got all of your drives and events put down together, the whole idea is the calculations and details behind them will support them as being income or expenditure. For the expenditure side of things, you're classifying them further, you're able to classify them further. And this is something which you may already have done, and if not, I'm sure it was something which we'll be touching upon in future sessions, and especially on the session on pricing that Nicola talked about previously. But basically your expenditure list, and you can see these items and understand this behavior from costs you probably already incur, will fall into broad categories of being fixed costs, semi-fixed costs, or variable. Now, fixed costs are those things that we can't avoid. That's your mortgage or your rent. You know what that's going to be each month. It's a fixed amount. It should typically be pre-agreed. We know that. Council tax is one, or if you pay any of your services by direct debit, you'll know exactly what the amount is monthly in advance. That's fixed. Semi-fixed, think about your utilities. Your utilities sometimes have a standing charge, so you know you're going to have to pay that cost, but then your heating and your gas are dependent upon how heavily you use them within that period. And then your variable costs are those which actually you don't have any contractual obligation to. They are just things that you're purchasing on top of all of your other needs. And obviously they vary from month to month because they're not fixed to you and they're not basically an essential requirement or an obligation. There may be an obligation for service delivery, but they're not something which are routinely expected, is a key thing. And from that, we just want to have a really brief touch on full cost recovery. Again, I'm not sure how many of you are familiar with full cost recovery. It's something which we'll touch upon again in the pricing piece, which I think has got a lot more, it has a lot of relevance to that, because the whole idea about full cost recovery is once you've taken your expenditures, and this is exactly like taking all of your mortgages and bills in the month, and once you've been able to understand fully the current and anticipated costs of them, as you would do for a project, what that does, it determines the basic cost. So you know how much money you need to bring in order to cover those costs. Now, I know, Nicola, you've got a formula-based piece, haven't you? You've got a calculator for people to work out how much they should charge for their time and services. And that's a similar thing. What you're aiming to do here, and the budget should also do this. So when you've got your cost and expenditure in your budget and you've been honest and logical and detailed that, you should have an idea about the total cost, the full total cost for delivering that service or good. Once you have that, that's the important thing. What you know is, you know how much money you have to raise in order to cover those costs and be cost neutral, or at least breaking even. From that, what pricing would tell you, that's where you're able to indicate or build in markups or margins so that you can hopefully recover more than just the cost and start generating profits. But yes, it is important that the budget reflects all of the costs, as per point 2 on here, involved, and those that would be involved in undertaking the task. And that's a reference back to the idea that sometimes you may be receiving free help and services and support from various people. You have to be able to put an anticipated cost or an average cost in if they weren't there, because obviously in the event that they can't turn up and can't support, or in the event that you actually get a chance to undertake something without them being there, you're going to have that support in place. This way you build in true costs and you also ensure a contingency, which is also very important. Perfect. And budget templates, I've got an example of a really basic budget template for those of you, I'm sure that you've all got something similar. And basically it's on the next page, but all it does is it details the income separately, details the expenditure separately. I've left it as a blank template, and the whole idea is this is typically useful and typically just the standard fare, because you have income in the top section, you have expenditure in the bottom, and then the bottom line is literally your income minus your expenditure. So that details whether you have a surplus or a deficit. It's spread out vertically so that you list all the line items in a list down, and it reads left to right and typically goes out for 12 months where possible, and at the end has a total column. So it's clear, so that everybody can see very clearly what your item is by month, by period, and then also by the year, so that you've got something there at the end as well. So you have that too. So that's just a very basic budget template, which again is just a really rough guide, because some people have different various ways of producing their budgets and recording them and putting them together. But it's all, once you've got all your workings and your backup as a main front sheet and a main summary sheet, this can be fantastic because it's just really, really clear. And it's in a format that a lot of other budgets will feed through as well. And what you want is something which isn't just easy for you. It might make absolute sense to you. It has to make sense to other people and other readers. Somebody else has to be able to see it and go, right, this is exactly what it says. But budget. We also mentioned cash flows, because cash flows, once you're up and running and once you're trying to get yourself on ground, are really important. And they're important because cash is king often, and money is effectively the means of survival for any venture. And they're important because obviously the cash flow, as it states there, is vital in informing of how much cash there is in order to pay for your essential costs, pay for suppliers, pay wages, pay for all the other elements. The key points for a cash flow, and we'll just have a look again, a bit like the example budget template, we've got an example cash flow template. The cash flow must only contain items which are cash. I know it sounds stupid and possibly silly for me to say something like that, but basically it just has to be anything which you can purchase, anything which you can sell. Those are the only items that it should register. Accounting technicalities sometimes look at accruals, prepayments, and depreciation, which I won't go into at all today. I don't want to scare anybody off at all, but there's a lot of ways that we measure items which are in a non-cash method. This is simply the point of, did you buy something? When did you pay for it? How much was it? It's exactly that. You want to include the items and the service as and when it's paid for, even if it's in advance of use. You want to be clear about the items. We mentioned granularity. The best way you're going to help yourself is to set separate lines to be able to understand the cash impact better. And that's the only way that the cash flow is actually going to be truly honest about it. It's like looking back at your own bank statements. You can do a historic cash flow forecast from looking at your banking online or through whichever method you receive it, and putting that down into days or putting that down into weeks to say, this is how much money came in, this is how much money went out. You have to be honest about transactions, because when you're doing a cash flow forecast, you're effectively trying to work out how much cash you're going to have at the end of the day, at the end of the month, in order to be able to be available to you. So you have to be honest about it, because if not, the only person that suffers is yourself. If you put in too low a forecast, effectively at the end of the month, you'll have far less money than you expected, so you'll have far less to carry forward. You've got to be, again, honest about the items and the services needed and their value, which just relates back to that previous point, and the other one about being logical and honest when you're doing your budget. The only person you trick when not doing this, and especially if you have a venture, is yourself. It might not give you the answer that you want. People can tweak cash flows and budgets in order to make their lives feel better, in order to make themselves feel better. That is not really the answer to anything. You want to get a true reality and a true answer to what the situation is so that you can actually address things. If it's not paid for, on the cash flow forecast, obviously we're looking ahead into the future. So sometimes you'll be thinking about items you might be buying or a professional service that you might be procuring from somebody. That's fine. If you haven't paid for it yet, but you know it's coming up within your forecast, then You can use a quote that that person may have given you, or that a company or organization may have provided, or an estimate that they may have provided. Or if you've used them in the past, you can use a rough estimate from there, but at least you're accounting for the fact that that cost will be there, or that income will be there. So that's important. All goes back to honesty. We've got a bit of a flow diagram here, and the key action again with the cash flow is to determine when you start. Most people try and tie their cash flows back to the budget and have them in the same period of time. It's entirely up to you, because that works perfectly well. Typically 12 months, it could be shorter. It just gives you an idea. As we follow through this diagram, the key thing to think about is your opening balance. Your opening balance is going to be your cash brought forward. If I was to start now in May, and I wanted to start in the month of May, my opening balance would be my April closing balance from your bank statement. And what you say is, right, what am I then expecting in May? And what you're expecting is cash that's due in. You're expecting cash that's due out. And then obviously you have a closing balance. So once you've taken your opening balance, put in the forecast for everything coming in, put in the forecast for everything going out, you're left with a closing balance, which then becomes carry forward opening balance for the next period. Each item, a bit like income and expenditure, it's either cash in or cash out. It has to be one or the other. It's an absolute rule. The closing balance, again, informs of how much available cash you have and how much you're going to have to carry forward. And again, when you're doing funding applications, when you have bank applications, when you're putting things forward, we talked about budget. Cash flows are often almost normally a necessity. For some of you may have come across this before, if you've worked with many of the funding or grant awarding organizations, they want to try and see maybe 6 months worth of accounts, or at least a cash flow forecast into a future period, so they know that you've given some thought to what's going to happen and how those incomes and costs are going to sit. So that's all important, because the cash flow represents survival based upon cash availability. Quite a busy spreadsheet, I know, but it's a blank template. But what this looks at is the way a cash flow forecast typically could work. Hopefully you can all see that on your screens. Hopefully it's big enough, but I know that I can share the template and the slides as well with Michaela if you so wish.
And I was going to say, Gurj, just on that, obviously you've just shown the blank template to people, and it's a bit like, oh, how do we start with this? Some people will have started using something like that. Others kind of need to get cracking with it. But this here shows people what might be in those blank boxes. So where you're looking at income, it might be funding, it might be loans, it might be contract, it might be some fundraising, it might be product 1, product 2, service 1, service 2. There might be there's different ways you can categorize what your income might look like, so that when Gurj talked before about granularity, rather than just have it all in these lumps, you can break it down a little bit so you can track and see and monitor things a bit more clearly. And then on the expenditure side, that Gurj just put a whole list there. It's hard to squint and see, but you see when we send stuff around, things to do with salaries, things to do with rent in your building, and things to do with general overheads are typically what you will have. And we've got examples of this that we can show you when people are looking at this sort of stuff. So I'll hand back to you there, Gurj. I know some people can't see this because it's small, but the top half is to do with income, and the bottom half is to do with expenditure. Exactly that.
So what you have in the green sections is your opening cash balance. So if I just signal here, we'll send this out. I mean, as a blank document, it just has it has different levels or groupings of what income could be. We talk about being granular. The idea about this financial suite of reports, such as budgets and the cash flows and everything else that we're doing here, you've got to make this usable for yourself. It's got to read to other people, but it has to mean something and be usable to you. Now, it's going to be usable and also start to give you insight when you can start to understand how things behave. And the way things behave is getting an understanding of them over time, so that they actually pull in, but you can actually see their individual behavior. If you just had income grouped together and not split out perhaps a bit like this, or not split out between, for example, gift aid, reclaims, loans or donations, you wouldn't be able to see how well you did or how well you're expecting to do. donations as opposed to loans. So you can't then set yourself future targets and understand how you're doing on that particular line. It might just be seen as income to you, but at some point during the line, as you grow and as you succeed, there will be a need to split that out. If you have that split at the beginning and you do it when you're setting your templates up as you set up, it makes things a lot easier. And as and when you get questions and details for funding applications or anything that's very particular, you're able to provide that detail to say, my loans are worth X, my donations are worth Y. I know the difference and the distinction between them. I know how much income I generate, for example, versus how much income I generate through grants and funds and other policies. So I know how much is public funding, I know how much is private funding, I know how much comes into me directly, I know how much I'm anticipating, and there's actually a question mark over it. All of these things are far easier to understand, and it gives you a greater understanding of your performance. And that's the key thing. This isn't designed to be an onerous task or anything else like this, or a survival task. The idea about this is always feeding back information to you. It's signaling where there's an issue, it's signaling where there's a fantastic positive opportunity. And that's the key thing. This, as long as it's on the budget, yes, you may have a budget that you want to take out and show people, and you want to give to banks, you want to give for funding applications. But you need to have a budget that you work on that is clear for you and is important, and you understand it, and where you've captured everything honestly. So there's nothing wrong with you. It doesn't all have to be a one size fits all or be all in one document and all be correct. The idea is you need to have something that works for you, that you can translate, you can understand, and is telling you something, right? Putting something into, I've seen it before. People just go, all right, salaries. And I'm like, but salaries has national insurance payments. It has PAYE, it has pensions and auto enrollment, which is the law now. So, maybe you want to break that down to work out where the basic is versus the whole thing. Wrapping something up in one big round kind of like grouping is almost like putting your head in the sand financially when you get there 3-4 years down the line, because you actually then have to unravel it to really understand how each line is performing. And those are the key things. So when we talk about this, we talk about cash flows, and this is a format. If you're approaching or building this, there's nothing to say that you have to do it quickly or in time or whatever. You need to take your time to make sure it's right. So the slide that we looked at previously, a few slides back, talked about the methodology, and it talked very clearly about setting things out and giving yourself an odd number of times to review things. Nobody, I don't care who they are, can do any of these tasks in one go, because they simply will not have all the information, and they will not have all the insight. It just isn't possible. And you do not have to beat yourself up or put pressure on yourself to have that ready and have that prepared. It's far more important to have something that's honest and genuine and true to your venture than it is to have something which is patched together, which just fulfills a particular obligation. Because the only person that loses out is basically yourself, because effectively what you're representing of yourself and your venture through those financial statements isn't necessarily true to what you want them to be or where they want them to be. They don't give you the information for you to act upon things. So here, I have split this down as an example. I've got salaries, rent rates, we've got professional fees in there. But professional fees I've also split here, just as an example, into contractors, which people might be working for you to deliver what you do, legal, pardon me, accounting and audit. I've got repairs, maintenance. Some of these will apply to you, some of them won't. There'll be other categories that apply very specifically to you. There isn't a one size fits all. Sometimes people go, have you got a model for this? I left the budget blank because the lines of income and expenditure will be yours. And every single person, I guarantee you on this call today, could fit one in, and there'd be a line or two on one budget that just does not appear in any of the others. And that is just the case. Because
I was going to mention as well, a lot of people, when they start running what they do, aren't necessarily employees of whatever it is, and they'll be invoicing whatever. They'll be invoicing an unincorporated association, or they'll be invoicing the company. And as Gurj says, your salaries and national insurance and pensions might be zero for some time, but you might have additional lines like associate 1, associate 2, volunteer 1, volunteer 2, or volunteer budget, so that you can still be tracking the effective delivery costs of what you're doing, and who's freelancer 1, freelancer 2, or whatever you want to call them, so that it's clear to you what's happening.
Yeah, and even if you're a sole trader, for example, you're literally setting up and you're just selling certain items, you might not, I wouldn't suggest you be at that point ideally. I think the Kelly would be the same. But if you're at the point where you're not necessarily paying or covering your own salary, but you're covering the costs of delivering a good or a service, you might only have a portion of this where you've got any costs applicable, which is absolutely fine. And the whole idea about the forecast is, and the whole idea about this table is, once you've done it, it's not fixed. You can always go back to it. You can always review. You can always amend. And it's only useful to you if you are reviewing it. It's only useful to you if you are going back and measuring where you are against it. And because otherwise, you're never really getting an idea of how far you've come. You're never getting an idea about everything that's really positive and successful. But you're also then not necessarily always having a full view of all the costs that you do need to be registering and all the costs you are incurring. Because sometimes you can have an anticipated view of how much money you're going to have left at the end of the month, but other surprise costs do come in, and you need to be able to make sure we can't forecast absolutely everything, but we need to make sure that we are thinking about all logically, rationally, and honestly, all of the costs and all of the items that you will have on that list. But those lists, as Nicola just said, will be different. If you don't have salaries and you have unincorporated, you will, as I say, you will have associates. If you've got people who basically are freelancing for you, you won't have them on a payroll, but they should be sending you a freelance invoice or giving you an idea about how much their cost is per hour or per rate, so you can work out how much cost to kind of include.
Another little tip, Gurj, and you know, people, especially small organisations, don't have the time or the staff to spend hours and hours beautifying and titivating and making sure these things are perfect. We just don't. Sometimes if you need to quickly put together for a funder, you know, your last 12 months or some actuals around what's going on, or maybe you need to start doing this to kind of analyze what's happening, but you've not done it yet. The best way to go about it, if you're at that stage, is go to your business, community, or whatever current account, whatever bank account you're using to monitor, manage the funds and resources that you've got. That is in effect your cash flow forecast. It's just not written like this. And what you can do is go back month to month and just track for the last 6 months or the last year or whatever's best, and you will quickly see what your income and expenditure is, and you'll quickly see what categories you're spending money on. And the sooner you do that, the sooner you start to create the categories basically that you put into a template like this, or that you perhaps start to use either with an accountant or within QuickBooks or within something else that we can talk about again. But if you're a bit nervous of this, you're probably doing it anyway without realizing it. You're just not analyzing it. If you've got a bank account that's managing your project, your business, or whatever you're doing, and it doesn't take that long actually to go through and transfer the information from a bank statement into a template like this. And that's one place to start if you're a bit like, how do we do this?
Yeah, I couldn't agree more. I think what you'll find, I'm with a high street bank actually, if you go onto online banking now, they tend to do that. They tend to categorize the types of costs that you have and the incomes, but they also give you a very clear view of cash in, cash out per month. So you can go back and just see, it just says cash in, gives you a total figure, one headline figure, and out. So you can start using that as by all means your starting point. And as Ken says, this might be what you aim or hope to get to, but it's useful. But you might not even want to do this. All of your detail might be on an accounting software, and some of the free packages even really offer some really good ways of being able to record that and extract information, giving you sort of management information as well. So if it's already there, by all means, you don't need to reinvent the wheel. It's there. But the whole idea is about thinking about it in a way such as this, so that you actually have your categories. Some of those categories might be more broad than you actually feel or think they need to be. So you might need to kind of change them. And you also might need to change them over time as and when new categories come into place.
And sometimes your categories, whilst they may or may not tie in with traditional accounting, templates or softwares, they might tie in more with what you're applying to funders for. If you're consistently applying for similar types of stuff from a funder, and you're wanting to track that, or you're wanting to analyze that, or you're wanting to check how much you're spending on a certain thing to be able to, budget effectively, or ask for the right amount of money in a funding bid, or to demonstrate that you know how to manage money in these sorts of ways, then you might find that some of your headings tie in with, you know, what your budget needs might be for project delivery costs, service delivery costs, or things like that.
Yeah, absolutely, absolutely. And I think when you're talking about building confidence and trying to get your fear out of things, I think going back to the previous slide, I mean, that literally is it. Your banking statement detail will probably do that to a great effect, but that's all you're doing. You're taking an opening balance, and when you're doing the forecast for future periods, all you're trying to work out is what is the cash that's due in that period, what is the cash that's due out in that period, what is the closing balance. So that's all that literally you end up putting together and doing, and that's what the cash flow is. But it's important because obviously it indicates survival. And as Kayla said, if you're going through particular funders and they want to see either more detail, or they want to see a split by project, or they want to see a different split by time, you know, you can do it. But the logic and the rationale really is just that. If you've got anything historic as well on your previous statements or your accounting software, that can also help hugely in being able to give you a defined idea about what costs might be in the future, and you can use that as an estimation as well for forecasting. So that's all there. I know I appreciate it's a lunchtime session and we've had a bit of a whistle-stop tour, so I think there might be more questions possibly than answers sometimes from some of these, but more than happy to pick those up as well. And then we mentioned about measuring performance. Measuring performance is really key. You know, you'll have a budget, you'll have an idea about where you expect to be. You'll either set that based upon your objectives and your mission statements and where you are, but measuring where you are in terms of your actual incomes and actual expenditures over a period of time that you budgeted, and seeing the variance is really important, because that's the element of review that basically keeps you going, keeps you alive, and make sure that there isn't anything untoward going on, and provides real value for you. That's the feed forward approach. It's about saying, this is where I expect it to be, right, hang on, I'm going to review where I actually am. And those actual costs with your bank accounts and with your accounting software, as you're receipting expenditure and as you're receipting income, a lot of them will give you those tables, a lot of them will give you an idea about what your actual expenditure is. And sometimes you can put in time parameters. So you'll be able to run it for a month or a quarter or a half year. And often they provide you with really valuable levels of kind of management information, which is what was my actual spend. And you can compare that to what you thought you were going to spend over that period. If that's higher, then it's a case of investigation as to try to understand why. It should be hopefully very clear as to why those things occur, and they should really be in your control. But the idea is if you're under, for example, then again, that's a positive. Is it because you actually got better rates or prices on goods? Or is it because an event or something didn't actually occur? So there's lots of different ways of looking at it, but it's really important, because without that, your time spent producing the budget and giving yourself that guide just doesn't mean anything. It's pointless. And without looking at your actuals in terms of where you actually are, again, you're putting your head in the sand often and not really looking at what the reality is. And doing that regularly, and it depends upon, if you're new, how big you are and how important that is. That might be something that's worth doing quarterly if there isn't a great deal of activity going on a monthly basis. It might be something that's worth doing half yearly even, if you're very, very new. But the whole point of that is that you set into a regular routine of making sure that you're reviewing your actual performance versus where you expect it to be. Because that's the only place when you do the variance analysis, that's when you're really looking at the analysis to go, that was a risk I didn't foresee. Brilliant. I need to know about that and think about that for future forecasting. Or that was an opportunity I didn't see. I need to possibly capitalize on that going forward. I need to think about how I can use that more. I need to think, actually, did I run an event and it was really successful, far exceeded my expectations. I raised far more money from it. I had far more income come through, or I had far more donations. Brilliant. You need to keep working on that and keep trying to build those types of events in. If you did really well selling or working within a particular region or with a particular network, perhaps it's a case of going, that worked really well for me. Let me see if I can try and build upon that to see if that will be be useful for me as well. But the key thing is, I mean, I've talked about a month, quarter, or a year. It really does depend upon the size of your venture and organization, and it depends upon the level of activity, the volume of activity. If you're not really doing a great deal of activity, but you budgeted for it, then obviously doing it monthly is going to be something which is going to be partly excessive. But doing it on a regular basis just means that you also have that review and best practice, because when you come to do funds, bids, and also when you come to possibly speak to your accountants at year end, they'll want to know that there is some level of internal review to make sure that costs and incomes aren't just running amok without them being looked at. So it's really key. It's important, again, and it provides vital information about the ability to generate income through increasing revenue or reducing costs. So the perfect example would be that you did a really fantastic event, you didn't budget for, all of a sudden it comes through, and you go, right, I didn't budget for this, but it worked really well. What I'm going to do when I review my budget next time is I'm going to try and put one of these events in, I'm going to try and schedule one, and based upon last year, I can actually start to budget for the income I think I'm going to have. I can start budgeting for the expenses that I had incurred with it as well, for example. Or if you want to take that event and magnify it by, say, a scale of ×2, you can say, actually, yeah, I'm expecting to receive, obviously, therefore, more income, but I obviously need to sort of account for there being more costs. But this is really important, because as you grow and as you get bigger and as you get to a point where you're looking at yourself and doing reviews, this starts to inform your strategy. Because if you're going down a particular path and costs are there, and they're always or continually much higher than they are in your budget, then that's a means to going back and having a look and reviewing. So last year, there's examples of, I've known socially kind of like conscious cafes, socially conscious kind of eateries, and places like that, where what they did is they set a budget, but obviously COVID hit. So what they did is they had to go, right, we know that our actuals are plummeting against what our budget values were, so it's not been a great year. However, as and when they were allowed, they opened for takeaway, they started to engage in other communities, they started to build those volumes back, they started to actually sort of like develop new networks and new income streams, and did it in a different way, so that they were actually kind of like building upon opportunities. And that obviously would have affected the way that they would budget for takeaways and that type of work, until COVID and the restrictions lifted. And so that would have completely affected their strategy. A lot of people had to completely shift and do things in a different way. And a lot of people were very successful within that too, because they realized different outlets and different points of interest, but also different markets for their material. There are a lot of people doing things on a regional basis, for example, for well-being, mental health, etc. And obviously over the last year, they've realized if you were confined to a particular region, actually that need was something quite national. So there's always a way that your strategy and everything else is being affected. And that has to be understood and picked up by the numbers. So it's always important to be able to kind of measure the success of those programs, but also measure as and when you need to take action. So somebody last year, without measuring their actuals against their budget, and in particular, for example, there was a restaurant and obviously they had to close down because of COVID. If they didn't measure their actuals against the budget, they wouldn't have known how much money they were losing and how much money they needed to have and cover in order to make sure they were sustainable. And the key thing about this is it's about building sustainability. It's about building an insight. It's feeding back to you all the time to give you information. It is your best friend. It is the person that is very honest with you and tells you exactly where things are. You might not always like that answer. You might not always like that response, but it's something that you need to work with, really, because that's the situation that you're in. So I mean that's really important, I think, from income and expenditure point of view. Again, we talked about it previously. I've talked in and around the structure of it. What you do have, very much like the piece that you have in the budget, is you have the income incurred in period A, that would be section A for yourself. That may have a list of anything that is income to you in all the different types of income, and it may come in different and various sources. Expenditure incurred in the period would literally just be every single line of expenditure. As Michaela's mentioned, there isn't anything specific, but you have to be honest and logical about the expenditure you are incurring. Previous, past, or even just very recent bank statements and details, or invoices, or anything else that you've received that you have electronically as well, you can cache in and use those as a guide to tell you the types of expenditure that you have and the frequency of them as well. So that's really key. And then obviously when you minus the expenditure from the income, you arrive at either a surplus or a deficit, and hopefully a surplus, because that's a positive position that we want everybody to be in, because you're able to either reinvest that back into your own activities, or you're able to use that to progress your cause. So that's really important. I've got a schedule here, just as an example. So everything that I've just been talking in and around about the income and expenditure, there's an idea and an example of, I've just called it Good Giving Organisation. And for the April month 2021, I've got a basic idea about what the income would be, an income total and expenditure. And then we just got an idea of a budget and then a variance to budget. So on this particular example, I've got, for example, sales. Top line set at 500 for the month, and the budget was at 450. So that means in the variance, my sales exceeded my budget by 50. Brilliant. I want to know why that was. Because if there's a reason for that, then did I stay longer open? Was I now selling online? I don't know what that might be, but I want to investigate that. Donations slightly less than expected. Is there a genuine reason for that? Lower footfall, people can't get out. You don't have different channels to allow people to donate to you, so it would be expected perhaps to be lower. But you want to be able to have a reason behind it. Grants, we've kept them as being coming in as expected, because hopefully that should be a bit more certain. And then that gives us an income total, which in terms of its bottom line, in terms of income, both hits £950 for the month in this example, which is absolutely fine. In expenditure, you've got staff costs. We talked about the way that costs behave. Staff costs should largely be fixed or known previously, known beforehand. So consequently, the budget and the actual meet, they match. Materials, our actual was £5 more than the budget. We want to know why. Were the materials more expensive? Do we need to start increasing our budget forecast for that? Was there something that we bought we didn't need? Travel was obviously slightly more again. Is that simply because people can't use other modes of public transport? Are they using the car? Is it more costly? But you want to be able to understand that, so that should the same situation or scenario come again, you're able to understand and anticipate those costs. Insurance, again, is one of those costs which we should have agreed beforehand, so should really be fixed. So we have that down at 30 and it matches at 30. But as you can see, the expenditure is 10 over where we expected to be in the month. So it's really, really key, because obviously that 10 then eats out the surplus from the 885 that we had in budget to the 875 as a surplus. So it does start affecting things. So it's only by looking at these types of schedules and understanding, which if you have free accounting software that some of the banks give, or if you're paying for anything like QuickBooks or the like, then they should have the setup and the ability to be able to provide and produce this tabular information for you. But looking at it and interrogating it so that you do understand the detail behind it is really the most important part, because that's what's going to give you an indication and an idea of where the organization is going into the future, and anything which may be a potential risk or an impact to your delivery. Again, all the points we've talked about here are detailed in this slide, so that it's used to measure performance, signal risk and opportunity, when it's measured against a budget and the prior year detail. It allows you a comparison in performance and highlight variances to be investigated. And the most important point at the bottom, the feed forward mechanism is here. You want to be feeding forward growth and positivity. You want to be stopping and nixing negativity as it comes through, so that you are not allowing additional costs or anything which isn't helping your mission or objective or helping you achieve where you need to get to continue financially. That's the key thing. It's about reinforcing positives. And we arrive at the Q&A.
Thanks, Gurj. I know it's kind of that after dinner slot. I'm hoping everyone's still awake. We've still got a good 15 or more people on the session, so we've put bits and pieces in the chat there. We've not had everybody tapping away. I don't know whether they're listening intently, they're falling asleep, or they're just bamboozled. I'm not sure, but I'm gonna, perhaps if you stop sharing your slides there, Gurj,
Of course, yeah.
we can see who's with us. I've been writing stuff down. Oh, that's good to hear. It is a lot, and it's hard to do virtually, because sometimes it's good to bring this stuff to life a little bit more. There's another, when I've been busy crafting an email while this has been on, and I'm going to send you a follow-up session that Gurj did. So you've had the kind of basics from Gurj here, and then there's another link that takes all of what he's been saying a little bit further, and he walks you through all sorts of scenarios and things. I didn't want to send that today because I know some of you were right at the beginning of this stuff, and I didn't want to kind of go overboard with session 1, but hopefully this helps give some of the building blocks for the language, what these things are, what they mean, and starts to make them feel like they might be possible either with support or, you know, off the bat, depending on where you're at with things. It'd be lovely to hear from people on what they've made or what they've heard, and also if you've got key questions or things that you've triggered in your mind thinking, oh, how does this work, or what's this, or tell me about this again. Now's your chance, because I know Gurj has got to go in about 10 or 15 minutes, so please let us know what you made of it. We've got, familiarising people with terms has been helpful. You'll be reading in the chat. And listing things, not actually paying for. Yeah, absolutely. People forget, I know all the years I spent working at Unlimited, one of the things that we would always try and help people with is this receipts log. So people are telling us what they're paying for with their Unlimited fund, or with what, but and the what else. What are you not billing to this? What are you not able to cover with this? What else? What else? What else? Because it's very easy for people who are very passionate, or people at the start of their project, or people who've not quite figured out where the money's coming from to cover this stuff anyway, would just keep not hemorrhaging, but finding resources to pay for things that are going to send them bankrupt if they're not careful. So if we can, that's what happens at the start. That is normal, although it's not healthy, and it's a bit like, oh, you have to. The sooner you keep tabs on it, the sooner you can work out what you're happy to do, what you're not, and what you need to cover, either by trading, commissioning, funding, fundraising, or pro bono. You can make sure that full cost recovery that Gurj was talking about, it starts to happen.
Yeah. If there's anything, I mean, I appreciate a lot that we've just gone through. It's quite dense. It's very heavy. A lot of it will kind of, I think the key things that stick are granular. The more granular you are, the idea about getting a unit cost is it starts to give you a cost per activity sometimes. And that's really important. The other thing that's important, as you say, is about making sure you capture costs for everything. There are things that you will get for free, things that people offer time for, things that offer that they're just not there for in the future. So you need to try and build that in, because even if you don't incur cost, you've built the contingency in. So if something else happens, you're working on the basis of having a contingency in regards to the charge or the good or the service that you're providing. So if you're holding an event and you've got friends and family helping set up and everything else like that, the minute that they're not there, you're going to either have to use volunteers, or either pay for people to do that, or hire additional resource, or literally possibly hire additional transportation. And those things can sometimes crop up as and when they do. And so building a contingency in to your programming and to your cost as well is also a good way of shielding yourself against things which happen in the future. So that's key.
Has anybody got any questions? I have got something I want to show people, just again to take some fear or to bring some honesty to this, but I wasn't sure if Magda or anybody had got any questions. You're off mute there, so I wasn't sure whether you were.
I've got a question that's not necessarily directly related to kind of budgeting and cash flow. So how do I capture like the income and expenditure that is related to running my organization, but that I cover myself? So a lot of the kind of operational costs, for example, like the website and the insurance, just because, we are a new startup charity and I've not managed to get any funding to cover those. I've been covering myself. So the money are coming out from my personal account. So am I okay to capture this?
You probably want to keep a log. You want to keep, so there's what the business is spending or what the charity is spending and doing. And if you know that you're covering things that you're not putting or not declaring or not I wouldn't say declaring, but not evidencing in the charitable operational management and financial management, keep a monthly log or whatever it is. You'll be able to go back to your whatever personal bank statement or whatever else and highlight what are things that were for the Bahati Foundation that you've propped up or covered, and potentially these things can go in to your organisation as a director's loan, so that they can potentially come back to you in due course. Most funding and funders that you will apply to won't fund things retrospectively. So it's not like you can suddenly go, oh, look, charity owes me £2,000. Where am I going to, well, let's apply for some funding for that, because it doesn't quite work like that. But there's other ways of thinking about how surpluses built into the way you operate in future can pay back certain amounts of money, or at least if you're tracking what the hell you're spending, we've all done it, we all do it, what you're spending to put in at the start, or to cover something that you're waiting to hear on, or something's cropped up and you really feel like you have to do it as like a loss leader or something. There's a reason why you're bothering to put your hard-earned cash into this thing. So long as you're logging it down, you can, like Gurj keeps using the word honesty as the name of the afternoon, you can honestly make a decision on how much am I prepared to write off my own personal finances as a give back from what I do. How much of this I know I need to come back to me, and how am I going to create a plan to make sure that happens? And you can start to, make decisions around that. Does that make sense?
Yeah. So it's So it's okay, even though it doesn't show on my charity's bank account. I'm still okay to include
ideal.
them, and include them in the account. So when
I'd speak to your accountant about that, and so that they can clearly see what, because it happens, and there's certain things you'll be able to evidence with your accountant quite clearly. If there are receipts for it, sorry, Gurj, were you wanting to chip in?
I was just going to say really quickly that if you've got evidence for it and you've got details behind, for example, the Wi-Fi that you're using, anything else like that, you might have a means of saying, actually, that's my personal Wi-Fi. But for example, I spend a lot of my time working on your charity. So consequently, what you can say is either you can speak to your accountant by all means, but you can only build a recharge model to say, I'm incurring these costs at the moment, but actually the time and the resources being applied to the charity. So can I recharge these costs to the charity? So if you have the evidence and the details, like Kayla's saying, receipt in terms of like a monthly statement, a monthly amount, so on and so forth. So let's say like your wife.
It's mileage, isn't it? People forget to record their mileage, and they're like, and when you log them all down, whether it's, usually people will charge 45 pence per mile, or that's the going rate for reclaiming back, that covers petrol and wear and tear and whatnot. And whether you're claiming it or not, or whether your organisation can withstand that or not, whether you're just gifting it, logging it down is something that your accountant can then factor that in against tax or against other things. Probably Gurj, I put it in.
No, not at all. You're perfectly right. I think that's the key thing to think about, and that's the key thing to remember, really. So yeah, I think it's that what you have to understand is, as long as you have the evidence behind it, companies do recharges between each other for all sorts of costs. So it's absolutely fine. But the key thing to remember is that if your charity is running now, but you're incurring the charges and you're not reflecting that within the charity, you're not truly understanding what it costs to run it. And that's the key issue. Because at the moment, your surplus that your charity is generating is based upon the generosity of you covering the costs yourself. So for you to have a true view of what that bottom line is and what the charity genuinely generates, you have to absorb all the costs within there. Because otherwise you're giving yourself, giving the charity an inflated view, basically, of where it's at. Because when someone turns around next year and goes, right, absolutely fine, that's eating out of your costs, your personal costs. So that's the other key differential. When we say about being honest, it's about being honest, because you could go for funding and you could say, right, the charity's making this much money. It's only making that much money because you're footing the cost of half of its services yourself. So you need to find a way and speak to the accountant of using an evidence of what they actually cost, and say, right, I'm going to recharge that cost per month, perhaps, to the charity, to show that it's an expense for the charity, but which I'm footing, but I'm recharging it on. So you pay for it, but you recharge it on. So it comes out of the bottom. It comes out of the surplus.
Call it a director's loan, or whatever you want to call it.
Yeah, you could even put it down as just a recharge. You could put it down as overheads recharge, something like that, because that's exactly what it is, and send it across. But until you do that, you'll be overinflating the position, the positive position of the charity, because you're not really showing all of the expenditure that it consumes.
Cool. Anybody else got any further questions? I'm going to I'm going to quickly show something and then I'll stop kind of recording this. But we'll come back. Are you all right, Gurj, for a minute, or have you got time again?
I'm going to unfortunately have another meeting at 12:30, so I apologise, but I will just take this opportunity. Just first of all, thank Michaela for organising this and putting all of her efforts into this, as she normally does, working back to back and literally just being probably overworked. And I really want to thank her for that. But I want to thank you all for attending and being here and sticking through it with me, because I know that a lot of it was probably quite dense and detailed. There's some other sessions that Kayla's able to share where we run into things into more detail, and hopefully we'll explain things a bit better. The pricing session is going to take the element of total cost recovery and what we've just been talking about the honesty and clarity of costs, into a different sphere, really. It's going to start looking at how you can make sure that you always cover yourself and that you're never in a deficit position with any activity that you undertake. So there's going to be lots of other things that we do. But if you have any feedback or you want to ask me personally any questions, I will be picking them up later on. So please feed them back via Michaela, via the chat, and also via any emails as well.
I know your slides will have your email address on, and we'll copy you in when we send stuff around. So thank you, thanks ever so much, and we'll see you shortly for another session there. I was just going to quickly show, because it's like, oh, you can look at slides till the cows come home, can't you? But sometimes you just need to see it written down. And Gurj has given you some examples there, but I thought I'd give you a real one, and I thought I'd give you a little bit of honesty. Claire's there saying, do you know you're still recording? And I'm like, it's the tidbits that people need. It's the reality. So I'm happy to record and share these, but I just wanted to quickly show you an example. So I mentioned earlier when we were running the legal structures session, in and amongst a freelance business, the KIC has flourished together that we run. I set up an unincorporated association, would you believe, back in 2015. And this is what it's done. I'll explain it very quickly in a minute, but basically it's to show you how you can turn 500 quid or very little money, into more, and how these ideas and sort of dreams or hopes that you've got for running what you're doing and creating income and being sustainable can be possible. And it doesn't have to be a massive business. Small is beautiful sometimes, and this is exactly a small is beautiful enterprise project, for want of a better term. It's got huge amounts of potential, and we've had to kind of run it into very little in recent times, because who could do massage and spa treatments in the current climate, or in the last year at least. But I have just applied for some funding. Whether or not we'll get it, who knows, but I had to quickly rush these things together, because it's an unincorporated association. We're not producing company accounts for this thing. It's down to my fag packet income and expenditure, which is what this is. So I thought I'd just show you, anyone can do this. So I had some of this information put together already, and I just added to it to bring it up to date for what I needed to do for the funding bid. And so when we talk about income, I was wanting to show them that from the beginning, this gives a summary for the funder on the kinds of income we've been able to generate. So this shows our track record. We had a couple of unlimited Spark awards to get started. And then, we've had event income, so our income, because we're working with people who can't afford to pay for spa treatments or can't afford to pay for training courses, actual income on the coalface isn't massive, year on year. But we've had contracts with Stockport Homes in a couple of instances, and with another housing association called City West. So we've had different contracts to either deliver health and wellbeing support, complementary therapies, or training people in how to become, holistic therapists, in order to, bring in income to run what it is we're trying to do. We've had a little bit of funding, a couple of years ago, to run an initiative and to train some people up, again running health and wellbeing events, pop-up spas, and to train people up in complementary therapies. And then, we've had some partnership work with Flourish. I've been toying with the idea, do we tuck this under Flourish, or should it be an enterprise in its own right? And so we've done some partnership work with Flourish to try and work that through. Through the pandemic, everything got mothballed. and I've been far too busy doing what I'm doing with Flourish to kind of worry about this. And so we did apply for a government grant, which we've not done an awful lot with because we couldn't, but it's there ready and waiting for delivering activities once we can get moving again. And then I've been looking at, scenarios for what we could do if we get, some WEA money to set up a programme in partnership with another organisation who will help us to do this. And it's just showing you, where this money has gone, and what you might call things, So whilst this has been associates that have delivered a lot of this stuff, it's tracking and logging it year on year, and for us, likewise for yourself, we needed bits of stationery, printing, different kinds of travel. I like to break it down so you can see what's going on and where you could save money. There's different kinds of meetings for business development, meetings for supporting things, other meetings. There's different kinds of event costs, refreshments, materials, miscellaneous, so you can peel out what's costing you what. There's training and development costs, equipment, materials, rent, but we've never had to do that. Insurance costs, phone and internet. And so it's just showing you how we've managed to operate, and how we've operated. We've not made a loss, and yeah, I've probably covered the cost of mileage here and there, and I've probably covered the cost of the telephone. I don't think there's some telephone costs in there, so these things happen, but it's just showing you what Gurj has talked about is possible. It doesn't have to be too complicated, and this is just showing you, going back to what we were saying about income generation mix, bits of grants, actual income, some short, small contracts, some additional funding, working in partnership with others, and so on and so forth. It's just trying to bring a little bit of that story to life, so it makes you realise, what's possible. And I shocked myself, if I'm honest, when I put this together and seeing what we've actually done, because as much as Gurj says, and he's right, do it monthly, do it quarterly, do it annually, whatever it is, at least doing it annually and not just doing it when you have to rush it together for a funding bid is advisable, especially if it's your bread and butter and it's your main business. This is, as I say, it's an enterprise project, but to see that we'd raised quite a bit of cash in recent years to deliver this, to deliver different outcomes, and the potential that it's still got was really helpful for me to see. It didn't take ages to put this together, so I'm just going to stop sharing that. I'm going to stop recording and hope that session's been helpful for people, and I will send some additional links on